Chris, it's great to have you with us today. So throughout the first quarter, you're approaching this from a quant point of view, and a defensive strategy has proven to be the most active. Is that the case at the moment?
Yes, we have a platform, custom indexing platform called Canvas. What we've seen is dramatic inflows where the strategy's doubled in assets over the first quarter. And this is part of what we feel is a positioning where allocators are looking more towards the risk profile of their portfolio rather than the return. And what we have is this defensive stability strategy that looks at a combination of factors with value momentum, but most prominently a stability factor that looks at historical operating stability through sales and EBITDA. It looks at management stability through share issuance, and it looks at the market stability as well. The strategy is designed to protect during downturns. We've simulated it across all correction markets at 10% where it's added value. And we've seen that bear out in the real time, where since the market peak in December, we've seen it where the strategy's added value for people. So we think it's a valuable, potential item to put in people's allocations as they think about all the risk in the market.
And in a strategy like this, tech overall is somewhat underweight, but there is still a role, right? What kind of tech would you be looking for in a defensive strategy?
So obviously technology companies, they come with some potentially higher beta stocks and also some current fundamentals that don't line up because of the growth aspect of it. But there are a number of opportunities within the technology sector. We think of it more as the tortoise versus the hare, but we see things in communications equipment. We see it in application software, semiconductors, payment processors, where there's a ton of opportunities. And we've seen that where these companies have the ability to help protect even within your tech sector and potentially offset some of the other growth bets in your portfolio.
Chris, what should I make of the fact that you're saying you're seeing an increase in allocation to downside protection, but a few days ago we were having somebody tell us that we're also seeing an increase in retail investors taking on riskier bets, trying to capture the upside in the markets. Is that some unusual divergence that we're seeing in investor behavior?
No, I think this is overall, it heightens what is, call it, the uncertainty around the current market environment, right? So we've got concerns about supply chain, geopolitical risk. We've got heightened valuations, interest rates, and inflation, all basically putting investors where there's a huge divergence of opinion right now, where some people think there's a potentially huge upside and opportunity. Other people are concerned and they want to protect.